Welcome to Daily Rates Live with the Mortgage Calculator. We will get started here in just a few minutes. Let us go live on all the different platforms. We'll get started here shortly. Appreciate everybody tuning in nice and early. Go ahead and drop a comment in the chat as you tune in. We'll get started here shortly. Just need to wait to go live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. Feel free to keep dropping comments there as you tune in. Thank you, everybody, for the comments. Owen, Yakita, Raul, Jason, appreciate you tuning in nice and early and dropping the comment. We'll get started here shortly. We got a great topic here for today we're going to jump into shortly. All right. Thank you for the comments. Benedict's chiming in. All right. It looks like we are live on all the different platforms, so we can go ahead and get started. Feel free to keep dropping comments as you tune in and drop any questions you have in there as well. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern is go through the live mortgage rates, and then we do a deep dive into a different topic every day. So today we're going to do a deep dive into 40-year interest-only loans. Now, there's a few ways to go about this and a few different types of 40-year interest-only loans that we can work with. So our sales manager, Jose Gonzalez, with 27 years of experience, is going to go into a deep dive of some examples of that here later. But before we do that, let's do what we do every morning, which is pull up our pricing tool and go through the different live mortgage rates today for a few different programs. So Nick, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we'll check it out. Probably not looking too good as the yields have been climbing already today. Let's go ahead and share our pricing tool. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR, including all the fees for today, August 21st, just after 11 a.m. All of the standard rates are live. The news last week wasn't so great, so rates went up, and then today it looks like they might be going up a little bit as well. But let's see how the markets have reacted. If you'd like a full breakdown of all the fees that go into the APR, please get with our team members. We have over 300 licensed loan officers that would be happy to send a full loan estimate. Now for our quick pricing tool here, we're going to set up the same scenario so we can compare across the programs. Going to set a loan amount of $400,000. We'll set the LTV to 80% loan to value, 20% down payment. Set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is a typical request. And we're going to check out our conforming conventional programs and then compare that to FHA. And then we'll check out non-QM options using alternative income, also known as expanded guidelines. VA we offer and USDA we offer as well. VA is only for eligible service members and vets. So if you are eligible, let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be shopping in a rural area, let us know and we can quote that up, no problem. We'll start today with our conforming option. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we use an estimated FICO of 760 and an estimated debt to income ratio of 40. So these settings, as we do every morning, let's check out the conventional options. So markets haven't reacted quite yet, so it's about the same as it was last week. 7.375 rate, 1 discount point in cost. Final APR 7.542. So it's a good option for our customers that qualify conventional, and hopefully this is again the highest we've seen in a while. So hopefully it goes down from here. If our customer can't qualify for any reason for a standard conforming program, typically the next option that we want to compare is an FHA option. So we'll set up the same exact scenario, everything exactly the same. All we will do is select FHA here, and that way we can compare across the programs. So let's check out the FHA options this morning. And it's about the same as it was last week here still, 6.75 rate, 0.875 discount points in cost, which our final APR 7.338. So in this case, it's actually a touch cheaper than conventional, which it has been lately. So our customers that qualify for both definitely don't overlook the FHA. In this example, it's actually a little bit cheaper. And our customers that must use it, definitely a welcome change to the program. Now, if for any reason our borrower cannot qualify for FHA or conventional, that's where most banks or lenders don't have other options. But this is our specialty, as Kyle mentioned before, where we have over 5,000 additional loan programs under our expanded guidelines, also known as non-QM, where we can use alternative income. So we'll keep everything else exactly the same. However, we see a new option pop up where we can select our income. So full doc's what we use for conventional and FHA. So we'll typically choose the non-QM option in order to take advantage of one of these alternatives. We have asset-related programs we've done some episodes on, business bank statements, very popular. Our investor products we'll talk about in a minute. Our personal bank statement 12-month is the most popular. That's what we always use for the demo. We also have RSU, stated, VOE, 1099, P&L, and no income CDFI options. But most popular, as we always do for the show, is our personal bank statement 12-month. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may not quite be able to get as much income as they need to get the house they really want. So in this case, we solve our borrower's problem by using alternative income. No tax returns involved at all. We simply use their last 12 bank statements to determine a debt-to-income ratio of 40% in this example, using just the cash in their bank. Most self-employed borrowers qualify double, triple, quadruple the income, and therefore can solve the problem of not having enough income. So let's check out our non-QM solutions today. So not quite cheaper than conventional as it was the last few days, but right there, 7.5 rate, 2.375 discount points in cost. Non-QM always costs a little bit more. It's a non-standard program for a final APR of 7.613. So almost identical to conventional, just a touch higher to solve our borrower's problem. Now the standard cost here, we have a ton of different programs. Some of the programs more in the higher rate options may allow other items such as credit events like foreclosures and bankruptcies. So a lot of different flexibility we get, not only with income, but hundreds of different programs here that may allow us to solve other issues that would otherwise cause us to not qualify. Now, before we go into Jose's example, we always do our live rates for investment properties. So for the last two demos, we set up the same scenario. We've edited it to investment property for our investors, whether you're a first-time investor or seasoned investor. We have some good options. We'll set up 80 LTV as we did before. We'll set up our conforming option as our first demo. Then we'll go into our expanded guidelines, aka non-QM, for our investment properties. Remember, FHA, VA, USDA, all the government programs do not work for investments. So we're simply going to compare the two options. So everything else will stay the same. All we've edited is the occupancy. So let's see what adjustments the conventional programs have for investments. And again, with the recent price increases, this is probably not a valid rate, so take this with a grain of salt. But the best option the computer was able to find was 7.5 rate for 4.5 discount points in cost. Probably never recommend a customer spend that much. And final APR 7.783. So this is an option for our customers that qualify for conventional. We probably have to move it around a little bit. This would probably not even be a compliant rate. So most of our customers not only need another option to make it compliant, but also would rather not spend this $18,000 in this example on discount points and would like a higher rate with lower discount points. And that's where our non-QM options come in. So for the final demo here, we'll set up the same exact scenario, investment property, ADLTV, and this time we'll choose non-QM, expanded guidelines. So first option we always select for our non-QM is our income. And the most popular income option for investment properties is going to be our DSCR option because it doesn't require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR, stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the mortgage expenses of the mortgage we're proposing in this case, that is a ratio of 1.0 or higher, aka the property cash flows on a monthly basis. If the property does not cash flow on a monthly basis, we still have options for that. That's a ratio under 1.0. So tons of different options there. For the show, as we do every day, we'll put the highest value in 1.5. That way we can see all the loan programs pop up. And finally, we need to select a prepayment penalty that is standard for a non-QM investment property. We always select 3 years is the standard option. There are options for 0 prepayment that will cost more and limit the loan programs. And there's also options for 5 years, which will cost less, but again, limit the loan programs. Most common option of 3 years is what we always use for the demo here. So let's check out the DSCR options this morning. Oh, good. Options. The DSCR went down. Amazing, right? We love when non-QM goes the opposite direction of conventional, right? So this morning we got a 7.99 rate for our DSCR, 0.975 discount points and cost, and final APR of 8.056. So APR almost identical there to conventional, but we've solved our borrower's problem. No more discount points that are insane. 0.975 in our example here is only $3,900. So most investors, when they're presented with an option, a little bit higher rate, one has a lower rate for what was it, $18,000 we had earlier. This one has a slightly higher rate for $3,900. I'd say 90 to 100% of the investors that are presented with this option will choose a DSCR option. Not only is it more feasible, but it also requires no income or employment. Our borrowers can do multiple loans at the same time. And if we scroll down here, there's a ton of different options. Some of these may allow credit events, foreclosures, bankruptcies, things like that at a little bit higher rates. And some may allow us to use short-term rental income. Very common request. Now, what we don't show you on the live show every day are some of our other tricky options, which Jose is going to go over right now, which include the ability, especially for our DSCR loans, very popular option, to turn it to a 40-year interest-only loan. So with non-QM, at many of our different programs, obviously only certain ones, we can add this option almost as kind of an add-on to our quote. So we can always quote the standard option, then we can obviously side by side, if the program allows, quote the option to use these pretty cool alternatives, such as the 40-year interest only. So I'm not sure which options you chose, Jose, so I'll let you go ahead and set it up. But let's make you big here, and you can go ahead and take it over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. 40-year interest-only loans are one of the great tools we have in our vast toolbox here at the Mortgage Calculator. The great thing is that most of our options, I say most because not every single one, allows you to qualify at the interest-only payment with a 40-year amortization. That is amazing, because that will definitely allow you, for example, to get in at that DSCR where you need it to be, which would result in much better pricing than if you were to have to go to a DSCR below 1.0, right? So just knowing this cool little trick could save your borrower thousands of dollars and could elevate you to being an amazing consultant rather than just an application taker. Right? Because that's what we're looking for at the Mortgage Calculator, consultants. So we have all of the spectrum of loan income types here, from full doc to DSCR. So in our first option here, we are maxing it out 90% LTV, full doc loan. Now, I will state that the interest only 40-year amortization option is only available in non QM. It is not available with agency loans. So, no matter how hard you wanted to look for it, you're not
Very,
gonna.
very common misconception. There were some
Yeah.
articles out there about 40-year amortization. It's not applicable, guys. That's for different things.
Absolutely. Yeah. So I wanted to bring that up before everybody's mind started racing here on how they were going to relock their agency loan. Not going to happen. So here we have a very good option, 8.5 as your lowest rate option. And you can buy it down all the way to 7.375 for your 90% full doc non QM 40-year interest only option. So now we have our investment full doc. Maximum LTV is 85%. As you would imagine, limited offerings for an 85% LTV 40-year interest only on an investment property, but it is available. We're looking at 9.5% lowest rate option lowest cost option, and 9.375% lowest rate option. Very close. So now we go to one of our favorites here, bank statement option, and this is for a primary. And yes, we are looking at 90% LTV. 8.625 is your lowest cost option. Actually, a little bit of a lender credit there. And 7.625 is your lowest rate option for this 90% LTV 40-year interest only primary purchase using bank statements. And now one of our favorites here is the DSCR. And yes, we can go up to an 80% on the 40-year interest only purchase. We do have 85% LTV DSCR purchase options on a 1-unit property, but that option is not available interest only with a 40-year amortization. So we are looking at a very good rate here of 9.25%. And you can buy that down all the way to 7.75%. And I will state this quote here is for a 1-unit, but it is also possible 80%. DSCR, same 40-year for a 2 to 4 unit property. Keep that in mind. Now, our interest only 40-year cash out. Here, our first option for a primary, it is at an 85% LTV for your full doc option. Look at those rates, very good options. 8.625 is at par, our lowest cost option, and you can buy it down to 7.5%. And now our investment full doc, same 40-year, is maximum 80% LTV for the 40-year interest only option. And 9.625 is our lowest cost option, and 7.999 lowest rate option. And our bank statement option is also 80% maximum LTV on a cash out refi with a 40-year interest only. And again, amazing rates, 9.125 lowest cost option, 7.999 lowest rate option. And here we have an investment. The one I just showed you was primary. Well, here we have an investment option. And again, very good rates here. 9.625 goes up a little bit here because it's investment property, but same LTV. 9.625 is our lowest cost option, and you can still buy it down to 7.999. And now using profit and loss reports for income verification. Now, obviously, the P&L and bank statement are for self-employed borrowers only. I'll throw that in there. And again, 9.625 is our lowest cost option. 7.999 is our lowest rate option. And now we jump to asset utilization. Remember, using liquid assets has your job has no bearing on this, whether you're self-employed or whatever. No employed job is not used for asset utilization. You're looking at 10.874 with a $500 lender credit, and you can buy that down all the way to 8.624%. And last but not least, our favorite flagship program option, our DSCR 40-year interest only cash out refi. It is maxed at 75% when interest only here. We're looking at 8.999, which is a very good rate, by the way, as your lowest cost option. 7.499 as your lowest rate option. We do have, by the way, an 80% LTV cash out refi on DSCR, but that is not possible when you're going 40-year amortization or interest only. But that is an aphrodisiac, so I do throw it out there so you all can chew on that one.
All right. I don't see any questions being asked. Oh, there is one from Owen. Interested to see the difference between DSCR and conventional 40-year interest only.
So a little bit of a misnomer there. There's no conventional 40-year interest only, but there is full doc non-QM where we can, use W-2 income or whatever. So Jose showed all the options there, I think, after you asked.
But just out of curiosity, Nick, I don't remember. What was your rate there on the investment agency? It was pretty high up there, right?
The APR was, the rate was a little bit lower, but the cost put the APR at 7.8 something.
Yeah.
Was the APR. So, yeah, it's way up there right now.
So we're looking at similar rate as a DSCR, pretty much.
Yeah, I think it was a 7.5 rate, but with all the fees, it pushed it up to 7.8 something APR, I believe. I have it on the other screen, so I can't pull it up there.
Which is actually higher than the APR that I'm looking at here for the DSCR.
Beautiful.
Great. All right. Well, great options there. And as Jose said, we typically can use this as an amazing tool, especially for DSCR to get your ratio where it needs to be. So for those of you that are struggling with your DSCR ratio, this is a go-to tool that you can discuss with your clients. And as Jose said, we need to be consultants, right? So it's something to discuss with your client and see if that's an option that they would like to move forward with.
Let me say one thing, though, too. I guess, Jose, you didn't do any. There's 40-year AM, and then there's 40-year interest only. So when you guys are pricing, remember, those are two different products. We went over 40-year interest only today. We didn't go over just straight up 40-year AM. Those have different effects on your DSCR, right? So just make sure that you're looking at the right option, right? Because there'll be a 40-year IO and a 40-year just straight up 40-year when we're looking at a lot of these non-QM options.
Yeah, there's also 30-year interest only as well.
Great points. All right. Well, thank you, everybody, for tuning in. Visit us at themortgagecalculator.com if you need help navigating these loans. We do this show every weekday, 11 a.m. Eastern time. So you can tune in as we do the live rates for that day and then do a deep dive into a different topic. So we will be back here tomorrow with a new topic. So we hope to see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.